The pound has been in consolidation against the US dollar over the last couple of weeks as politics continues to dominate in these two countries. In the last 24 hours alone, we've seen Nancy Pelosi, the leader of the House, the Democrats, call for impeachment of the US president. Meanwhile, in the UK, the Supreme Court has ruled against Boris Johnson's prorogation of Parliament, forcing opposition leaders to call for his resignation. So there's been quite a lot of upheaval in both of these countries on the political landscape, lending itself to volatility in both currencies. In terms of where we go from here, it's still relatively unclear. I think there's still many people who doubt the impeachment of Donald Trump because the Senate would need to back it by 2/3 majority, which seems extremely unlikely. And equally, the calls for resignation of Boris Johnson may also fall upon deaf ears. But this still leaves us with a political landscape which is still very volatile and again lends itself to volatility in the currency markets. And of course, this comes against the backdrop of a trade war between the US and China and Brexit here in the UK, which is now only 5 weeks away. The prorogation of Parliament here in the UK has been effectively suspended itself. So now today we have seen MPs return to Parliament for debate, and Boris Johnson, the UK Prime Minister, is scheduled to make a statement. This comes again against the backdrop of a very volatile market environment where we have seen periods of risk aversion, and again that's lent itself to plenty of volatility in the markets. We're seeing the pound trade around 124 against the US dollar currently, 123 being a notable level of potential support underneath it, but really we're looking a bit above at this moment in time. We have seen a bit of a bounce in this currency pair. We saw it break out of that long-standing downward channel, which began with the resignation of Theresa May, or when it became evident that Theresa May was going to be forced to resign because she failed to get her Brexit deal through Parliament. And the more it became clear that Boris Johnson, a keen Brexiteer who was not afraid of no deal, was going to take over, then the pound did go into a rapid decline throughout that period. We are seeing a bounce back as Parliament has taken back some control here in the UK, forcing the Prime Minister's hand, passing a law, forcing him to request an extension to the Brexit deadline of the end of October by the middle of October if no deal has been agreed and passed by both London and Brussels. But what this means now is that we're still in this period of uncertainty, hence the consolidation that we are seeing. There is still potential upside for the pound here, but in order for that to occur, then no deal ultimately does have to be blocked by the end of this month. And while that niggling feeling that Boris Johnson still has a card up his sleeve, still has a few more tricks that he can utilise in order to push for no deal, use this threat against Brussels and potentially deliver no deal on the 31st of October, that is going to continue to weigh on the currency in the near term. But where it leaves us is very much in a situation whereby Brexit is still unresolved. No one really knows what's going to happen here in the next 5 weeks in the UK. And again, that lends itself to a lot more volatility, of course, in the markets. But it also means that the pound is going to remain very vulnerable. While near term, we may see a little bit of upside, and 126 has been the most recent peak. But even 127 above that, when we're heading into those key Fibonacci levels, could be quite interesting. It is always going to be vulnerable to these shock moves to the downside the closer we get to that 31st of October deadline.